Welcome, everyone. Glad you could join us today for our 1-hour webinar, Overcoming the 5 Largest AP Challenges. I'm Susan Plain, part of the marketing team here at MHC, and I'll be facilitating today's webinar. Our speaker is Brian Rosenberg, who I will introduce shortly. First, I'd like to quickly go over some housekeeping items. This webinar is being recorded. All participants are muted to prevent background noise. Please feel free to type in any questions you may have along the way into the Q&A section. Attendees will receive a follow-up email with a link to the recording on our website so you can view it again on demand. There will be a post-webinar survey that will appear when the webinar ends. Please use the survey to let us know how we're doing and any request information you'd like to have an MHC resource reach out to you. We really appreciate your feedback. Without further ado, I'm excited to introduce our speaker, Brian Rosenberg. Brian is the CEO of TRG Consulting. Brian is a leading expert in AP automation and process improvement. He has over 15 years of experience in the design of accounts payable shared service centers and nearly 20 years of experience with implementation of accounts payable solutions. Brian has led large-scale P2P transformation projects in roles including interim leadership, project manager, change manager, process improvement leader, and system architect. Mr. Rosenberg is a published author and speaker on procure-to-pay best practices. He is certified in Kaizen, Six Sigma, project management, and change management. One more item before I hand off the presentation to Brian. For those of you not familiar with MHC, MHC has always focused on delivering document and data-related solutions to automate and streamline operations, which are designed with business users in mind. Our software solutions take our customers' data, whether it be electronic files, documents, data in a database, or paper, and transform it into easy-to-read, actionable information that is delivered to the audience or recipient that needs it at the right place at the right time. Now let's hear from Brian.
Thank you, Susan. Appreciate it. And thanks everybody who's joining us today. We're going to be covering a lot of information today. And so I'm going to go through and talk about some of the largest challenges that I have seen as I've worked with accounts payable and procurement departments over my history, which Susan kindly shared. As we're going through that, we're going to cover a variety of different challenge points and talk about the things that you can do to overcome some of those challenges. And so in many ways, part of this as well is challenging you to find ways that you can drive change in your organization through some of the ideas that we're going to be talking about today. I do want to mention that I'm going to be going through this at a fairly rapid pace because there's a lot that I'm going to want to talk about. I would encourage you to ask questions. We're going to be holding questions until the end. However, if you do think of a question, feel free to put it into the question box along the course of this webinar so that in case you later on forget about it, or also to make sure that we get all those addressed as we get those last couple of minutes for questions at the end. So I'm going to hit a lot along the way. We're going to have a couple polls to find out a little bit about our audience and some of your current challenges and some of your observations about what you're hearing today. So with that, let's go ahead and get started. So first off, I think that it's important to realize that accounts payable has become harder over the last 10, 15 years as I've been a part of it, and as likely as you've been a part of it, that the role is constantly changing. We have an efficiency issue that many departments are understaffed. It is hard to justify adding additional staff because the department is viewed as overhead. And it's challenged to get investment in technologies that you need. We'll talk about some components of technology as part of what we'll be discussing today. But often I see that even if there's a recognition that the technology would be helpful, it is challenging to get that investment. Compliance is constantly changing. And I think, tax laws have become significantly more complicated. And that ties into a variety of different kinds of taxes like sales tax, unclaimed property, and others that are a component of what many of you are dealing with. And there's this need for constant education as laws change, dealing with your local laws and state laws. And then in general, there's an issue of perception in accounts payable that tends to be the kind of operation that people don't pay a lot of attention to until there's an issue. And the perception could be driven by a particular incident that they have, as opposed to really what the data might be telling you about the amount of times that things are done right. And we'll talk about some ways to address that through the course of this, but I think that a part of this change is being driven by technology. And part of this change is being driven by the fact that all of this has become harder. And I got some bad news to share in that I don't think that's going to get easier as we talk about inflation. And you probably think about all the problems that inflation may be causing, the challenges in your personal life, or if you dare look at your 401k, that inflation is causing many challenges for the economy. And the bad news is that it's not going to make things easier for AP either. Many people have been dealing with cash flow environments where there is enough cash flow that accounts payable can pay bills on time. Vendors have been lax about things like late fees because the reality of it is that the money that they gain from late fees and charging interest has not been as significant while interest rates have been low. And also prompt payment discounts, which were a big part of accounts payable 15, 20 years ago, have become less a factor. And much of that is driven by the reality that interest rates have been so low that the vendors don't necessarily have a lot of internal pressure to get paid quickly. And as a result, they haven't put that pressure on accounts payable departments. So what you're going to see as a result of inflation is that your organizations are likely to have more intense cash flow challenges, that you may see returns if you haven't been dealing with this, to having limitations on cash flow, reluctance to borrow money to pay bills because interest rates are higher, and increased pressure from vendors to pay timely because they are going to be more interested in getting paid faster because they can't borrow money as cheap as they used to, because they're being held accountable as an AR department to collect faster. And all of this is going to change the way AP departments operate and put additional pressure on you to deliver timely payment to vendors and to take advantage of discounts that are available. And I think you also will see more discounts being available. So the first challenge we're going to talk about is this idea of discovering a path to a modern AP operation, getting to modern AP. And what we're finding is that many AP departments struggle to get the right technologies. We'll talk about what those technologies are as the first part of it, that you can be looking at to overcome that challenge. You components of this today, you may have all of these components, and you'll see that's transitioned a lot over this time. But each of the technologies we'll talk about is a baseline of what a modern accounts payable department needs to be able to be successful. When you look at the traditional approach to accounts payable, paper being received through the mail, AP staff performing a clerical function of putting in the data, of entering in information, where you're balancing being able to do it fast with being able to do it accurately. You've got filing, you have paper checks, and a lot of this is labor-intensive processes. This is the traditional way AP has been approached in the past. And depending on your organization and what you've put in place, you may have addressed some of this in the past, but you still see a lot of departments dealing with large volumes of paper. Or what you also see is that there's been a bit of a transition to more emailed invoices as a result of the pandemic. While a modern AP department is going to be paperless, meaning that we're going to have everything be electronic from the point of receipt until the point of payment, and not have paper sitting on people's desks and being passed around. The departments are focused on providing value-added activities, and we'll talk more about what that means throughout the course of this discussion, and more is automated so that you're spending less time performing the daily tasks that are more clerical in function and have more time to be focused on more value-added activities to be able to make the department more valuable and more successful. But some of the challenges that AP departments experience today, not having those technologies, we talked about not having consistency in processes, and that could be because there isn't standardization of processes, or it could be because there is standardization, but the standardization is often broken down because of exceptions to the rule. Or maybe you don't have centralized processing, and as a result, you have differences in the way processes are done between one facility and the next. But these are common challenges that AP departments need to overcome in order to be able to achieve that goal of modernization. And I think it's interesting to note that as we talk about AP automation, how that has evolved. And I started working in AP departments in the late 80s, early 90s, dating myself a little bit there. But I started working with departments, and at that time, everybody said that in 5 years, in 10 years, there's going to be no paper, everything's going to be EDI. And it's interesting to look at the history of this. The first EDI transaction was actually done in 1965 on telex, and the 1980s led to the ANSI standards that became the basis for EDI. Yet where we were in 2019 is you were probably still getting the majority of your invoices through the mail. The pandemic forced some change in that many AP departments were working remotely, and it led to a big shift where more and more vendors started sending their invoices by email. But emailed invoices still need to be entered. They still need to be processed in the same way. It saves a few steps, but it doesn't save, it's not true electronic. And so we've seen that despite having these technologies and despite the promises that EDI was going to be the basis for this, I kept hearing that 5 years from now, there'll be no paper in AP. And for years and years and years, that promise was made. But the reality of it is that it really was the pandemic that resulted in the largest shift. And even then, it has been to email. So there's a lot of opportunity for improvement still in many AP operations. So first poll question to find out, what percentage of your invoices do not require entry and are truly touchless? And to be touchless, I want to qualify this for the purpose of this discussion. Touchless meaning that you don't have to do anything to process that invoice. It flows through electronically. It's automatically available for payment and completely touchless. So curious to see the responses. So let's go ahead and go ahead and take a moment.
We still have responses coming in. It's fluctuating quite a bit. Okay.
Seems to be settling down.
Yes, I'll end the poll here and
Okay,
share
great.
the results.
So very interesting. Shows here that so only 4% indicated a 40% or more touchless invoice rate. And it's not surprising that it was a large number that was skewed towards the lower percentages. I think it is really interesting that 70% of this audience is below 20%. That's touchless. It's really incredible that there's such a large number. And then you've got the balance, 26% in that 21 to 40 range. So this is definitely a challenge for most of the organizations that are on the call today. And nobody here is claiming to have very high levels of electronic invoicing, of true touchless invoicing. So very interesting. And we look at the components of this that we have. The first is the idea of paperless AP. So this has probably been adopted for the most and is one of the more widely used, but perhaps not used truly in its ideal fashion. But the idea of document imaging I think is really a core technology that any AP department needs to have in order to be on a path to success. And it's not just about processing faster, it's about managing your resource workloads. One of the first AP departments I worked with had a problem that they didn't have a document imaging system and they were backlogged. And I was interim leader of that department. We would actually take all the unentered invoices and we would put them all up against the wall and measure them with a ruler every day so we could understand what our backlog was. When you don't have electronic, all those invoices scanned and available electronically, you can't manage your workload in the same way. You don't know what the volumes are of exactly what you have outstanding. It's much harder to understand where things are in the process and what needs to be done. If paper gets passed around an organization, then you have lost invoices. So really believe in the idea of scanning everything, true paperless accounts payable. Obviously, if you can get it electronically, better. If you get it by paper, processing it, immediately scanning it, treating it through workflow from that point forward. saves the filing time, creates more visibility to the entire process from the moment that you receive it. Then there's the idea of approval being electronic. So the idea of creating visibility and accountability to approvals through a workflow tool that allows you to be able to route your invoices for approval to the person who needs to be able to approve it, go through different levels of approval if necessary. Really important technology, not just because it eliminates the passing of the paperwork back and forth, but also because it creates visibility into the bottlenecks in your process. It allows you to have everything electronically signed so that you know for sure that the person who said that they signed it did, as opposed to having paper signatures where ultimately, unless you're a handwriting analyst, you don't really know if it really was the person whose signature is noted there. And to have all this information and metrics to be able to track their requisition to check timeline from beginning to end. And you see that there's adoption of this on the approval side in some organizations, but the other part of it is exception routing. And exception routing sometimes is handled through an ERP system with something like a matching price discrepancy, for example. But there's many examples where ERP doesn't handle the right type of exception routing or doesn't handle it well, where you might have, for example, invoices against a closed purchase order, for example, or where the purchase order needs to, it should have had a purchase order, but does not. There's lots of exception kind of processing that might also benefit from a workflow process. So again, this is a technology that if you do not have, that is a baseline technology that every AP department should have. And if you do have, really think about, are you maximizing that capability and using it to the full extent of what it's capable of doing? The next sort of core technology as we talk about all of this is intelligent invoice capture, pulling data off of a scanned image, having AP staff be a validator instead of a data entry person, and then allowing that to upload to your ERP system. This is a big part of shifting resources from focusing on data entry to more value-added activities. And sometimes you hear people talk about the idea of this being touchless process, but whether it's truly touchless or not, there's a big difference between spending 3 or 4 minutes entering an invoice, or maybe 5 minutes entering an invoice, and spending 20 or 30 seconds to validate that the capture has captured all that information correctly. So this can be transformational to an accounts payable department, to the way that AP departments operate, to the roles of the AP staff, and not only creates more efficiency, but also increases accuracy, because you have, in essence, a double check on everything. Now you have the system checking and you have a person validating it. And so you have that increased protection from mistakes being made. Very powerful, very transformational technology in a lot of AP departments. And you've seen much more adoption of this and continues to be a major factor in a lot of accounts payable departments. The other thing to consider is that we talked about the idea of true electronic versus something like email. And an emailed invoice doesn't have to go through paperless accounts payable because it's coming in paperless, but it does need to go through approval or exception routing, and it does need to go through capture. And that's one reason that these technologies have continued to be vital to accounts payable operations. So we're going to talk about these technologies and various components as we have this conversation, as we talk about the ways that you can solve different kinds of problems. But looking at it in terms of this particular challenge, one thing to focus on is to make sure that these baseline technologies are part of the solutions that you have in place. And if you do not have those solutions in place, then one of the priorities, one of the challenges to you should be to find the justification to be able to bring in those technologies, again, that every accounts payable department needs. And ultimately, all of these different solutions will drive back to having the right technologies in place. Second challenge we're going to talk about is around the idea of providing exceptional customer service. One of the challenges I see in a lot of accounts payable departments is that there's not a focus on that customer service component. And what that leads to is that while 99% of the time you may be doing a great job, the 1% of the time that you don't is all anybody remembers. And that can happen internally, that can happen externally. And I think somewhat unfairly, accounts payable departments are judged a lot based upon vendor issues as well, where perhaps a vendor has not done the things that they're supposed to do in order to be able to get paid timely. That could be that they didn't create an invoice that matches the purchase order. It could be because they didn't indicate who the approving party is. It could be because they didn't put on a PO number when they should have. It could be because they sent the invoice to the wrong place. There's a variety of reasons that could happen. But one thing I see often in the customers that I work with is that accounts payable, being sort of the end of the line of the process, when there's a credit hold, gets blamed for that problem and is responsible to scramble to resolve the discrepancy that ultimately the vendor themselves made. And I don't think we have enough of an attitude in the industry that the vendor has a responsibility to bill to the purchase order. And I think that we, as a group, have a tendency to allow the vendors to get away with a lot of mistakes that they shouldn't. But a big challenge as to why we don't address that effectively is because there's perceptions that accounts payable is not delivering the level of service that gives the confidence that it really is the vendor who made the mistake. And having the technology, the information, and the metrics, and we'll talk a little bit more about metrics later, that are necessary to be able to demonstrate that the vendor was the one who made the mistake. So when we talk about customer service, it's important to realize that there's a difference between what you do and say and how people feel. And your brand, that ultimately your department has a brand and a perception that's held both internally and externally, is based heavily on that perception that gets created by how people feel about their experiences that they have when interacting with you. And that is one reason that customer service is so critical to the success of any AP operation. And you think about what is important in customer service, and the reality of it is that what we want and experience in our own personal lives is very much the same things that our customers want of us in accounts payable. You think about what do you hate and what gives you a bad customer service experience in your life. And there's things that everybody probably has an experience like, so for example, long wait times when you're on hold, or when you get on with somebody and then they put you on hold to go check on something, and you end up waiting on hold for another 10 minutes, 15 minutes. Everybody's had that experience. Everybody hates that experience. And so you think about, if you're doing that to someone, what is that perception you're creating? Quoting the rules is a great example. I think that nobody wants to hear from a customer service person a dictation of policy. They want to know that the person on the other end of the phone is genuinely interested in helping them. And that ties into this third bullet point here, that a bad customer service experience is often when somebody just doesn't feel like they care. They're just trying to get us off the phone. When we don't get an answer, when they say they're going to do something, but then don't do it and don't follow up on it, when they don't appreciate your time. And this last thing I'll get into in a second, but the rest of them kind of tie into this whole thing about perception and the attitude that you present through that experience has a big impact on how people feel about your department. And I think a lot of times when accounts payable departments have people who are processing invoices or making payments, picking up the phone and talking to the customer, and that customer could be an internal person, a department manager who's checking on the status, or it could be a vendor. When you have people who are not dedicated to this function, to them, it becomes a distraction from their primary job. And as a result, they're not delivering that service. And the reality of this is a different skill set. There's a different skill set between somebody who can enter in an invoice really fast and really accurately, and somebody who is good at talking down an angry person on the phone. The last thing I want to mention here, this last bullet point, is the whole idea of calling in the first place. And I think it's really interesting because I actively, in my shopping or service experiences, I don't make phone calls anywhere near as often as I used to. I have a natural tendency to look at online chat services or texting When I need some information about the status of something, my instinct is not to make a phone call. And probably many of you have that same experience. And that was interesting too, that this stat, 25% of millennials don't use their smartphones to make calls. So they forget that that's the primary purpose of a phone. So increasingly, there's a desire to interact with people without making a phone call. And I think that it's really interesting how few accounts payable departments have adjusted their customer service processes accordingly. When you look at, particularly internally, the ability to have online chat service as a way to be able to interact with people, when you have the ability to use email, but email that gets quick responses makes a big difference. Create mechanisms and ways that people can interact with you in a way that creates a better experience. And ultimately, online chat is probably the most efficient method of delivery of customer service because it takes away the chit chat that comes with being on the phone, so it's more efficient. At the same time, it allows for immediate answers, which email does not, so that people have the opportunity to eliminate contextual misunderstandings, get right to the point, have real-time interaction, and be able to do a better job. So when you think about it, from an internal standpoint, when people contact the customer service department for an accounts payable department, what do they want? Well, 90% of the time, they want to know why their vendor hasn't been paid yet. The vendor's threatening to put them on credit hold. The vendor's upset with them, and they want to resolve it, because they feel some accountability or responsibility to that vendor. So think about that visibility of information. Can you make it so that that person has the ability to be able to view the status of that invoice on their own, so that they don't have to request help from customer service at all? Can you use something like a chat service to make it easy for that internal person to interact with you without having to go through, fill out a form or make a phone call? Allows them to be able to continue on their day and do their job while interacting with accounts payable, which also means not only are you making it so that accounts payable is more efficient, but you're also making that other person who works for your company more efficient as well by allowing them to continue to service the customers or complete their responsibilities while resolving this issue. And also consider customer service training. And there's the element of that of hiring people who have customer service skills and expertise, as well as training up the people that you have today to be able to do a better job of providing service. Because the reality of it is that is a completely different skill set. And some people are going to be very effective at it, and some people just don't naturally have the attitude, the friendliness, the optimism that makes for an effective customer service person. Just to look at, when you look at one of the organizations that, so I live in Las Vegas, and one of the organizations very popular here in Las Vegas is Zappos, which is well known for their customer service. And one of the things that they do, and you can test this theory out if you want, wait till after this webinar, please, but you can test this out yourself. If you go to Zappos and you use their live chat service, they train their customer service staff, and I've done tours of Zappos to see their operations. They train their customer service staff to help anybody with anything they ask about. So you could go to Zappos and you could say, hey, what's the weather like in Las Vegas? And they will answer the question. They will help you. They'll tell you what the weather's like in your area. They'll answer pretty much any reasonable question that you ask them, even if it has nothing to do with buying shoes. I'm not suggesting that your accounts payable department should be in the weather report business, but it is a bit of an attitude that you should think about, that they believe that good customer service is about helping the customer no matter what. And think about your internal customers, the internal department managers who are contacting you as customers, because that's what they are. They're your customers. And measuring the results is important as well. Think about that measurements that you can have and some metrics that can make a difference in customer service. You want to make sure you have a system to log your customer service requests. That can be an official CRM system. It can be a spreadsheet. It doesn't matter. You need something to be able to log the calls you're getting, so you know the volumes, know when they're coming through. And some of these basic statistics. You should have a first call resolution. How often do you resolve something on that first attempt? How long does it take you to resolve a typical customer service request? And to be able to compare those timelines to a service level agreement. And if you don't have a service level agreement with your internal customers, then that's a good step to take to create a service level agreement so your customers know what to expect, when you'll get back to them. Create those expectations so it's not a surprise when you take a day to get back to somebody. Or if you can beat those expectations, that you can demonstrate that you consistently beat those expectations. All things to think about with internal customers. With external customers, one of the things to think about is the idea of vendor self-service, a tool that allows you to be able to share the status of invoices with your external customers, to be able to see and allow them to do basic things that they may contact you about, like they want to update their address or they want to change ACH information, as well as submitting invoices so we can get them electronically, get their 1099s. These are common interactions that your vendor base has with your AP department that you can have be automated and allow them to be able to reference that information themselves. This can dramatically cut down on customer service calls, and it also can allow the vendors to have more confidence because they can see the information themselves rather than hearing the check is in the mail. Caution, however, if you do tell vendors that the check is in the mail when it's not, vendor self-service can be counterproductive because then they can go in, they can look at it, and they can see that what you're telling them isn't true. So this is helpful for AP departments that are providing honest information. But if you are in a situation where you are having to slow down payments to vendors and you are having to tell them that it's something that may not be true at the moment, I don't know of a good way to say this, but if you are in a position where you are telling them payments are being made that are not, vendor self-service can be counterproductive. The other thing to think about is that we don't have a lot of controls around things like ACH information. There's been a big trend towards having vendors submit to get payments by ACH, so we eliminate the paper checks, and that's a good trend. However, there is fraud concerns, and we'll talk a little bit about that later, around ACH, where vendors can have somebody request a change in ACH information. If you have form-based, where somebody sends in a form and you accept that form as evidence of that request, you could end up changing that bank account information to a fraudster's account. A vendor self-service system where they have a login, much, much safer. So all things to think about in relation to customer service and ways that you can improve the way that both internal and external customers perceive your department. Third thing is to think about the challenges, the idea of the changing role of AP in payment strategy. And I think that this is an area where there's an incredible amount of opportunity. AP departments in the past have been very focused on just paying what's in the system and what's due. And the good news is I think there's a lot of opportunity for AP leadership and AP departments to take a heavier hand in determining the optimal way to leverage the cash of the organization to make more informed payments to earn the organization payment-based income. The challenge, as I mentioned earlier, is at the same time, I think that there's going to be more pressure, cash flow pressure, where you're not going to have the same levels of cash flow that you've had in the past. So if you've been an organization that has been paying everything on time, you may find that that's harder to do in the future. If you're an organization that already has had cash flow challenges, you may find those getting worse, putting you in a position where you have to make better decisions about what to pay and what not to pay. And so ultimately, the objective here is to get towards payment-based income. Payment-based income includes three general categories. There's prompt payments that used to be something that everybody talked about all the time. Pre-negotiated discounts, with the most popular being the good old-fashioned 2% net 10 discount. So at the interest rates that we had had until recently, you would have had to make a 37% return on your money to have it not make sense to take a 2% net 10 discount. Now, I haven't done this math with current interest rates where they've gone up, but I can say with great confidence that regardless of what that math comes to, there's no question that it's still going to make complete sense for you to take those prompt payment discounts every time you have them available. Even if it's a 1%, it's going to make sense. Even if you have to borrow money, even at the increasing interest rates, it's going to make sense to take that prompt payment discount. So where vendors haven't offered them as much, partly because interest rates being low, I think you're going to see a return of these in the future. I think also that accounts payable should take a heavier hand in negotiating more prompt payment discounts and helping the contracting departments to assess the value of them, to work with the vendors to make them available, and ultimately to process the invoices fast enough to take advantage of them. Second component of this is rebates, which generally comes in the form of credit cards where you're using a card and the card will charge a vendor a fee to swipe the card or process the payment, and they will give a percentage back to the accounts payable operation because they're basically splitting the cost that they pass on to the vendor. Some vendors will accept credit cards as a regular course of business. Some vendors will push back on this, but regardless, this is a tool that every accounts payable department should have in their toolbox. And not only gives you the benefit of that rebate, but also gives you the benefit of the cash float because you can typically wait 20 to 30 days before you have to make that payment. So you get a double benefit. So while this won't apply to every vendor, you should do this wherever you can. The third component of this is dynamic discounting. And dynamic discounting is sort of a prompt payment discount on the fly in the sense that it works in a very similar fashion, but rather than negotiating in advance, we're going to process the invoice, make it available to the payment to the vendor, and basically through an automated system, say to the vendor, hey, we don't have to pay you for 45 days because that's what we negotiated. But we can pay this right now for you if you like, but if we pay it for you now, we want 2% back. It does all this automatically, and a truly dynamic system is going to actually slide the discount based upon the number of days and a formula that you establish. So you can have it be 3% to pay you right now, and every day it could go down a little bit because the value of getting paid faster is decreasing. So the vendor ultimately has a choice. This tends to work best in industries where you're working with vendors that are a little more cash strapped. But I think that dynamic discounting has had a very poor adoption rate because of low interest rates. So I do see that this is going to pick up if interest rates continue to go up. And ultimately, how much those interest rates increase will have a big impact on what that acceptance looks like. So all things to think about, but ultimately all of this comes together in establishing a comprehensive payment strategy and having accounts payable play a role in putting together a strategy to say, when do we use each of these different payment methods? Checks, ACH, payment cards, wires, payment exchanges, dynamic discounting. How do each of these fit? ACH is a tool that a lot of people have adopted, but you shouldn't use ACH when you should use a payment card. You shouldn't use ACH and to pay a vendor on time when you could use dynamic discounting or pay them early to get the prompt payment discount. These are all pieces of the puzzle. And you should, as AP leadership, the challenge to overcome and look at the opportunity to you is to be a part of the overall strategy, provide the value-added service of finding the right way to pay each of the vendors that you work with, and then making sure that you process the invoices in a way that allows you to optimize these payment methods. So I would take a much deeper dive look into, are you taking the discounts? How much are discounts available? Could we take advantage of more? Can we work with supply chain and negotiate more discounts? Are we optimizing our payment card program? All of this is part of the ways that you can help your organizations to be able to get through some of the economic challenges that may be ahead of us. So I've thrown a lot about different kinds of technologies. So I'd like to take a moment, just look at what these technologies are using today to see how the audience falls.
I went ahead and launched the poll, Brian.
Thank you. All right, everybody go ahead and respond.
Still coming in.
There we go.
I'm gonna go ahead and end the poll.
Okay, it's interesting that so actually these numbers are a little lighter than I would have anticipated. In that it's interesting that nobody responded back that they're using a vendor self-service portal or dynamic discounting, or a tool for invoice exception handling. So those are opportunities for many of the folks on the call. But even the document imaging, document scanning, and approval routing numbers are lower than I would have anticipated. Intelligent capture and electronic remittance are low. So this tells me that there's a lot of opportunity in this audience for additional optimization through adoption of new technologies. And so I would recommend that you look at each of these different pieces. If you have some of them but not others, look at which one would be most effective for your organization. And if you don't have any of them, start with the basics, start with the paperless AP, and work your way up through this process of establishing more of these different technologies. But each one of these has a big impact on the success of your operation. Next thing to talk about is fraud. And fraud is a topic I could get into a lot of depth around. And one that people find very fascinating as well, especially as I share different stories and experiences from doing some forensic auditing of accounts payable operations and some of the things they could have done. But for today's purposes, I want to hit some highlights. In regards to vendor fraud, there's a lot of people do compliance checks. If you're not doing TIN number checks, you should be doing that. There are ways that vendors can get that a fake vendor can get around that. But one of the things that I find is interesting that very few people do, and a good takeaway if you don't do this, because it's so easy to implement, is do a Google search for a new vendor you're doing business with. See if they have a website. It's possible that you're doing business with some mom and pop shops that don't have websites, but that's probably a lot less common than it was 5-10 years ago. So I'm not suggesting that if somebody doesn't have a website, you shouldn't do business with them. But if someone's small enough that they don't have a website, you should at least be aware of that. These are basic steps you can take that make a difference, as well as doing TIN number checks. If you're not familiar how to do that, that is a process you can go through for free through the IRS's website. You can validate either individually or you can upload batches of tax ID numbers to validate that the ones that you have, and it will tell you if they're correct or not. And that's a process that, if you don't do correctly, will lead to rejected 1099s for B notices, and there's a whole process and extra work you have to do as a result. But in the end, it's good to know that the people you're doing business with really are real companies, and there's a great way to prevent fraud. Also verify when you're changing vendor information to make sure that it's actually the vendor requesting that change, particularly in the area of something like ACH. There's been examples of fraud where somebody submits an ACH request form to have everything go to their bank account, and real businesses have made the mistake of depositing money into the bank accounts of these fake bank account, fake changes, and as a result lost a lot of money. Fake invoice patterns, there's ways to detect that. There's a rule called Benford's Law. There's a movie called The Accountant starring Ben Affleck where they actually use Benford's Law to solve a forensic accounting crime. Hope that's not a spoiler. It's actually an action movie. So he's both a forensic accountant and assassin in the movie, which is the most bizarre combination I've ever seen. So if you want a action-packed movie about forensic accounting, that's a good one to check out. Invoice approval controls to make sure you're matching invoices to a PO or a receipt. Invoice approval should be electronic. So even if you're getting invoices through paper and they're signed, you should still send them out for approval electronically as well, because of all the controls that provides. And do auditing. I do recommend that invoices not be truly one touch. There's an example of fraud that I've shared in the past where it was a department manager who had a $5,000 approval limit. So he set up a fake vendor for a service that he had budgetary authority for, and got the invoices approved because he was the sole person who approved them for $4,900 every time. Did that every month for 7 years, and because he was getting away with it, started doing it with additional vendors under his approval threshold, and ultimately got away with stealing $800,000 before he got caught. Those kinds of things can happen. And so having the audit controls to audit for invoices just below approval amounts, for things that are not consistent with the patterns of business, and having that additional touch where even if somebody has that approval authority, have some of their invoices be checked out by somebody else, because you never know. Those kinds of controls can make a really big difference. And then with expense reports, mention that if your AP department's processing those, use a T&E system nowadays. There's so many of them available that there's really not a good excuse not to use them. Get the Excel spreadsheets, require electronic approval, have a good travel and expense policy, and also make sure that if you are paying vendors out of AP, that you know when someone's terminated so you can turn off their vendor record. Or ideally, some organizations have actually gone to processing expense reimbursements through payroll instead of AP. And usually when I suggest that, AP departments love the idea and payroll departments hate the idea, but it is a good example looking at it and saying, why are we maintaining ACH information in two places? Why are we maintaining the vendor information separately from the employee and risking somebody who's an ex-employee getting payments processed? All things to think about. And a lot of this, again, covering a lot, but I want you to just think about some of these ideas and how you can apply them to your organization. Now we're talk a little bit about that transition of AP staff, and realizing that as we talk about implementing these technologies, as we talk about more value-added activities like fraud prevention, like auditing, that an AP department can be doing, how do you get your AP staff from where they are today to where they need to go? And how do you help them to make that transition and hire new AP staff that fit into this new business model that can help you to be able to drive additional improvement? If you think about some of those characteristics about what that value-added AP department is all about, we talked about ideas of automated and paperless, the idea that we have everything electronic, we have a lot automated, so that things are happening automatically. We have transparency, so everybody can see where things are, whether it be the vendor, the internal staff, the AP department, the procurement department, sees where things are and understands where the bottlenecks are occurring, so we can address those, is all part of that. Proactive is the idea that the AP department is finding ways to fix problems, leveraging data, so that we can find ways to take the data of maybe it's a particular person who is never approving their invoices timely. Maybe it's particular vendors that have high levels of discrepancies between the purchase order and the invoice. There's an incredible amount of power in the data, and a value-added AP department is going to leverage that data to force improvements through process change internally, through vendor management externally, leveraging all that information to make improvements. They're going to be good stewards of the money, and that ties into both the idea of preventing fraud, as well as ties into the idea of finding ways to leverage more discounts and rebates, and working with the vendors to encourage them to go to these solutions, to be a part of a rebate program through a card, or offer prompt payment discounts, or take advantage of dynamic discounting. And then to be experts in understanding all these different legal issues and bringing in people and staff who understand unclaimed property, for example, which is a policy most people violate, because you have to process unclaimed property not only in the state you're in, but in every state where you cut a check. There's a lot of issues like that, where I would argue that these laws in many cases are ridiculously burdensome, but they're still there. You still have that responsibility. So focusing on proactive vendor management, cash flow optimization, understanding root causes, auditing, all part of what you want to be thinking about in building that value-added AP. And you need to prepare your staff for that and helping them not only to think differently, build these skills, customer service skills. It could be tax compliance skills, and general team building skills. I think we get away from this idea of focusing on how many invoices a particular person processes, and focus more as a department on the idea of how do we get invoices to flow faster? How do we address the bottlenecks and the fact that particular departments never approve their invoices timely? How do we show the information to force that change? And that requires a very different way of thinking within your AP operation. Establishing goals team-based goals, and SMART goals. And there's a lot I could go into in regards to goal setting and metrics. That is a topic to probably cover another time. But think about goals that are specific, measurable, achievable, relevant, timely, meaning that we are very specific. We want to increase the discounts taken by 20% in the next 90 days. We want to cut our backlog from 2 days to 1 day over the next 30 days. Establish those consistent goals and make everybody a part of that. Post those goals, establish rewards based upon achieving those goals on a department level to create more of a team-based environment, as opposed to measuring how many invoices one person processes versus what another person processes, which is what a lot of AP departments look at today. Look at it more holistically. What do we do as a department? How do we work together as a team to achieve better results? And establish a meeting rhythm that goes towards that. Daily meetings, stand-up meetings, particularly important if you have AP departments working remotely, to have the opportunity for people to raise concerns and see each other, acquire video, and have them be a part of it. Weekly meetings to review priorities, monthly meetings to see how we're doing against metrics, and then meetings to establish priorities and ultimately plan should be a part of what the appropriate people in your organization are going to be a part of. So I want to leave some time open for questions, and I covered a lot in a short period of time, but ultimately want to look at this from perspective of everybody being able to take away a couple things. I usually recommend 3 things that you can do differently at your organization as a result of attending this. So I'm interested to see, when you look at these 5 topic areas that we talked about, what of these resonated with you in the standpoint? What do you think you can apply at your organization to make a difference as a result of attending today?
Still fluctuating.
Still moving a little bit, yes.
All right. Let's go
Okay.
ahead and the poll. I'll share it.
So so the automation, and I think that ties in well with the earlier poll, that the audience did not have a lot of these technologies in place, and that's a foundation. You need to do that step first. Transition the staff. I think that this is an area a lot of AP departments struggle with, and understanding how do we take our staff who may have been with us 10 years, 20 years, and have them make that transition. And I don't want to suggest that everyone's going to be capable of making that transition, but there's a lot that you can do to help them. The customer service, the payment strategy, and fraud prevention, all great. And you look at this from the standpoint of taking a couple of these ideas and applying. All right, I think we have a couple of minutes to go through questions.
Before we do that, take questions, I want to take a moment and talk about MHC North Star. And by the way, thank you, Brian, for those exceptional ideas during the presentation. No matter what challenges you're facing today, MHC North Star has the capabilities to take your AP department to the next level. And with that, we'd like to do the next poll. And that's the next slide. We'd like to know which of you have an active upcoming AP initiative. You just please take a second to answer yes or no to that. I'll go ahead and end the poll. Share the results. And it's looking like 50-50 here.
Yes, and interesting topic that to talk about it sometime as well would be helping to justify those AP initiatives and establishing the business case for that. But it's interesting that it is such an even split.
So thank you for answering that last poll. And what I'd like you to know is that you can please reach out to Bridget to learn how MHC can help your organization achieve its AP automation goals. And what we're going to do is fit in a few questions here that have come in during the presentation. So let's go ahead and I'm going to take a look at what those look like.
If you do have a question, feel free to drop it into the chat box.
Yep.
Or the Q&A box.
Okay. Brian, here's one for you. Are there particular metrics you recommend for AP departments?
Yeah, there's a lot of possibilities around that. I would say that in general, I recommend, consistent with what I mentioned around the team building, I do recommend department level metrics, more team-based metrics, as opposed to focusing on individual productivity, because I think there's a lot that can drive that. When you look at invoice process per FTE, I like to look at that globally as a way to measure productivity of the department as a whole, to compare one AP department to the next. But I would also look at metrics around throughput, timeliness at every step of the process. And that's one thing where the right technology can make a difference, because it can be harder to get at some of these numbers. But as I mentioned when I talked about stacking up the invoices against the wall and getting out a ruler, ultimately, I don't accept the idea that numbers can't be measured. There is always a way, but certainly automation makes measuring this much simpler and much more accurate.
Okay, I know we're getting close to time, but I want to get a couple more in here. Next question. What can we do to hold vendors more accountable for match exceptions?
I think that's a good question. I think it's an area where there's a lot of missed opportunity. I think that so I've worked a lot in the healthcare industry, where I think that's particularly a challenge, where there's not enough pushback on the vendors. I see that in some of the industries as well. Exactly where you fall in that might depend on your industry and also your organization's strength in the industry. But I think that when you look at this core concept that I think we all should be thinking about, that when you issue a purchase order for $10 for an item, the vendor has to bill you $10 if they accept that purchase order and ship the product. That's a basic philosophy we should hold, that we have a right to force the vendors to follow our processes, that we have a right to push back when vendors choose not to do so. And so I'd like to see more of a stance in AP departments that the vendors have a responsibility to uphold their end. And in AP's defense, they also need the support from their leadership, from their contracting departments, supply chain departments, that they have a right to hold those vendors accountable, so that there's a partnership required there as a result. But absolutely, we should be doing more to hold them accountable, and starting from that foundation, that a purchase order is a legal document, that if you ship a product, that you have a responsibility to bill what's on that purchase order, is a pretty good start. And having that doesn't mean that you never accept exceptions to that, but it does mean that we need to put more of that burden of proof and responsibility to fix it on the vendor, rather than accepting that responsibility ourselves.
Great, thanks. We have a couple more here, but let's just take one. We're getting to the top of the hour. How about any strategies to prevent credit holds?
Yeah, so credit holds, I think, are the bane of the existence of many accounts payable operations, and particularly the way that it creates a very bad perception for accounts payable, because I think in many cases it's because of a vendor related issue, or because an invoice isn't approved. Sometimes it's because AP didn't process something. But I think in most AP departments, you see that either they want to pay everything that comes through, or they are not paying something because of something like a cash flow problem. So it's important to realize when a credit hold comes about, that AP needs to do a more proactive job of informing internal and external customers, the vendors, department managers, about what the real reason is and about their responsibility in resolving that. So I think that you can do more to prevent credit holds by working with those vendors to help them to understand their accountability, responsibility when those issues are not their fault, and to establish more confidence internally through customer service metrics, through having numbers about how often you pay things on time. They'll show that to your leadership, so they understand when something doesn't get processed, that it is either an exception to the rule, it's just a mistake, something didn't get processed, or that it's because somebody didn't approve something timely, or because a vendor didn't bill correctly, that there's a reason. And creating this shift to get the entire organization behind the idea that that maybe, just maybe, the vendor didn't do something they were supposed to do, and we should do more to hold that vendor accountable, like we were talking about earlier. It all ties together. And the right information, the right metrics, the right tools makes a difference. If you have workflow and automation like we were talking about, then you can see that a particular department manager takes 20 days to approve their invoices or didn't approve that invoice. You can show it, empirical evidence, to a vendor or to a leader so that they know that it isn't because AP just didn't want to process it or left it on the floor somewhere. So it makes a really big difference.
Great. Thanks, Brian, for your insights. That's fantastic information. I'd like to thank everyone for your time today. Please take a moment to fill out that post-webinar survey. We really appreciate your feedback, and we will adjourn for today. Thank you.
Thank you, everyone. Appreciate it.